Morning, Steve Free in Chicago with the morning grain comments. Well, it's Thursday. The market tends to look at export sales today to see direction on the demand side. There are some people thinking that we're making a slow transition from a market that traded supply over the last few months, especially with lower world corn and wheat crops and big soybean crops, versus going on to a demand market, which will need to see something every week in order to support prices. Overnight prices were lower. I think most of it has to do with both U.S. and China imposed new tariffs on $16 billion of each other's goods. No new word out of Washington as far as the talks that are going on between U.S. and China, but that's got the soybean market on the defensive. Also has the copper market on the defensive. There's some talk that China's economy is slowing, and that may be the main reason why they're in Washington trying to find some even ground on some of these future tariff talks. On September 7th, U.S. will impose tariffs on $200 billion worth of Chinese goods. As far as the weather is concerned, we're going to see some showers, spotty showers move across the Midwest, especially north, over the next few days. The 2-week outlook after that is warm and dry. Our weather guy said that for the fall this year we might have like a cool and dry fall, especially north. That should be good for harvest. Pro Farmer went through Illinois and Iowa yesterday. As far as Illinois is concerned, they found a corn yield near 193. Last year it was 181, and that's down from the USDA's 207. But last year the Pro Farmer missed the Illinois corn yield by 21 bushels, so it must be either on the wrong road or it's a little tough to guess the Illinois corn crop. Iowa had a range from 180 to 187. That's pretty similar to what they had last year, but USDA's Iowa corn yield is 202. So that might be offering a little bit of support underneath the corn market if the yield comes down in future USDA reports. There was a rebound in Chinese corn futures last night after China said that they will continue to try to get and promote use of ethanol in their vehicles. There had been some people thought they would put that on the back burner or table it because of the need maybe down the road to import corn, and right now they really don't have a good relationship with the U.S. as far as doing that. Funds yesterday, sellers of beans, meal, oil, corn, and wheat. They increasing their short position in beans and oil and corn, and reducing their long positions in wheat and soybean meal. So again, export sales are expecting somewhere around 500,000 tons of beans, maybe the same amount in wheat, and somewhere between 700,000 and 800,000 tons of corn. So we'll see what the export sales does to money flow. But right now the market is concerned about too much supply and not enough demand. As always, these are my thoughts and not those of ADM Investor Services, and have a safe and profitable trading day.